Hey folks, welcome back to another episode of T2SMC Trader. So over here, I would love to talk about the London session. Now, so far I have told you about the London session making liquidity. That means 95% of the time London is going to make the liquidity. So today's session is different because this is the rest 5% of the time where London actually didn't make the liquidity. Instead, it has taken the liquidity. If you see this high and that high, they were relatively equal highs inside the hourly bearish fair value gap. Now I would love to keep it over there. Instead, I would love to talk about this price action. In this specific video, I would love to talk about the event horizon, which ICT actually revealed in his last stream. I hope that it will give you some kind of precision as well to understand that how we can use that event horizon just for our bias. This 15-minute chart for Nasdaq, as you can see, market went lower. Took all of this liquidity, relatively equal lows, or everything has taken over there. This new week opening gap hold the price, send it back again above this new week opening gap. Now, right now, I would love to use these two new week opening gap. This is this week new week opening gap. That means Friday close and this Sunday open. First, market went through this new week opening gap, trade the consequent crossment of that new week opening gap. At the same time, I'm watching this bullish fair value gap over here. So if you have watched ICT's last 2024 mentorship, last episode of 2024 mentorship, over there, ICT actually told that I don't want to see price will accumulate to the bullish fair value gap near the consequent crossment. I was looking for the same thing. Did it do any kind of accumulation over there or not? I saw that no, it didn't do. Instead, market went higher, make this high. Okay, so let me mark this high, and that was the high after trading the 50% without the accumulation. Then market went lower one more time. I didn't want to see any kind of accumulation near the consequent crossment and wanted to see this high will be taken. But this time market didn't take that high. Instead, it has made that relatively equal highs. So this relatively equal highs was over there. Then market came back again over there. Now here is the part of, let me actually remove this inversion fair value gap. Later I will add that one. Here is the part of the event horizon. So in ICT's last episode, ICT ICT talked about the event horizon. That means there is a new week opening gap or new day opening gap. New week opening gap or new day opening gap. In between two new week or new day opening gap, how far market can reach? You will use your quadrant level from the low of that upper new week open or new day opening gap and the high of the lower new day or new week opening gap. So I have just used this quadrant level. So from here, just let me actually reverse it because I just make it like that way. Okay, over there and there. So this is the upper quadrant, this is the lower quadrant. Mark a box around that area. You will expect that market is going to trade in this specific area. Okay, it is not going outside of that specific area. Now there you can see it went little lower of that event horizon area. Yeah, sometimes move up can happen. It can happen. Okay, but look at the bodies tapped the 50% of that specific range. That means it stopped inside this event horizon. Then it went higher again, closed above this new week opening gap. Over here, that was the inversion fair value gap from 15-minute chart. Don't worry, I will show you the the entry as well. So over there, this is the inversion fair value gap. Let me actually change the color so that you will easily can understand. So far what we have learned, that when market has taken the liquidity, trade the lowest PDRA, after that means new week opening gap went higher, then there was a bullish fair value gap. We don't want to see market will accumulate near the market is not going to accumulate near the 50% of that bullish fair value gap. It didn't do that, went higher, make a high, then went lower again. You will expect the same thing. This type of accumulation is not going to happen near the 50% of that bullish fair value gap. It didn't do that. Instead, it has traded the 50%. You can see all of these things has traded this new week opening gap 50%. Then it went higher. It is going to take this high. So it is going to take that high, but it didn't take that high. Instead, it has made relatively equal highs. I will start to look for the event horizon because I have two new week opening gap. It went through this upper new week opening gap. How far it can reach? In between this event horizon, because market didn't take that buy side liquidity. First, it has made this buy side liquidity, which has taken over there without before coming over here. So this high has taken over there, but when it come here from there, this high didn't take over there. So you will expect that market is going to take this one. At the same time, remember 95% of the time London session is going to make the liquidity, but here there was no opportunity to look for London is making liquidity. So this is the area where you will look for some other setups if you want to trade. When market closed above this inversion fair value gap from 15-minute chart, at the same time upper new week opening gap from the event horizon 50%, exactly the 50% of that event horizon area went closed over there, you will start to look for your setup from 1-minute chart. Now I'd love to go to 1-minute chart over here. This is my 1-minute chart. This is that inversion fair value gap from 15-minute chart, as you can see, and market actually closed over there. This is the first time market closed, then come here. Okay, what is the time? 1:59. Are you inside the session? No, you are not inside the session. Are you looking for setup? No, you are not looking for the setup. You will start to look for the setup from 2. So this setup, though there was no setup, but either way I wasn't looking for any kind of setup over there. Then I've seen that market has made relatively equal lows. So this low and that low, they are relatively equal lows. This has taken over there by that run. Okay, market come back again where this inversion fair value gap. What should you expect? Market is not going to reach until the 50% of that 50-minute inversion fair value gap, right? Instead of reaching over that, even if it reaches over there, it's cool, but it's not going to go below the 50% of that inversion fair value gap. Over here, this was the area where you will start to look for setup. So market went lower, take this relatively equal lows over there. Also, there was the SMT with immediate S&P. I have already uploaded the entry video or everything to my Twitter. So if you are with my Twitter, you have already seen that. Okay. So there was first my target was the breaker block. Okay, low, high, lower. That was the breaker block. So let me actually mark the breaker block over here. This is the breaker block and that area. Okay. I just marked the consecutive breaker block. If you want to mark the highest one, which is the most sensitive one, this one, you can use this one as well if you want. I'm just going to remove this 50-minute inversion fair value gap so that I can explain this price action more, accurately. Okay, so it has taken this relatively equal lows, went higher, made this in a breaker block, trade that breaker block, took that high. Remember the high here, that was my target, because from 15-minute chart I know market is actually going to take this buy side liquidity. First, it has taken this high, which is also the relatively equal high. So this high, as you can see, this high and that high, they are relatively equal highs. My first target was over there, that relatively equal highs, and market has traded this bearish breaker block, not bearish actually, breaker block, went higher. Now, am I going to frame my setup from 1-minute chart? From 1-minute setup? No, obviously I have the 15-minute chart. So that is the important thing you have to remind, that sometimes you guys ask me, there was the inversion fair value gap, can I take that buy? There is the inversion or order block, can I take that sell? No, brother, you can't do that. You need to have the 15-minute point of interest at least. Okay, if there is a more bigger time frame, it's up to you, but for me 15-minute is my bellwether. I would love to use the 15-minute chart only. So I hope that to this breaker block entry, there was, you can see this little mohawk, that this market went through this breaker block little more, but it's accepted because it come back again to the 50% of that concurrent crossment. My stop loss was just below the 50% of that specific week. Look at this specific week, my stop loss was just below this specific week. There was my entry, and I did all of these things to my Twitter. I have already uploaded them. Then market went higher. There was the market structure shift. There was the fair value gap around that area. That was my second entry. Okay, there was the fair value gap. I was uploading the video, that's why I didn't push my button when it came to this fair value gap. After market structure shift, it came to this fair value gap. Now you can say, brother, is that a valid market structure shift? Yeah, obviously this is the valid market structure shift. I have this candle a week. Look at this. It's not here. Look, this candle and that candle. That candle doesn't have any kind of wick, but the next candle has the wick. So if there was no wick, I don't see them as a market structure shift. But as I had the wick, so that was my market structure shift with a very nice displacement after taking the liquidity from the high time frame period, 15-minute inversion fair value gap, as well as new week opening gap, as well as this event horizon area. Everything was in line. So when it has given me the market structure shift, that was the fair value gap, and here there was the the breakaway gap. The breakaway gap is not clear over there. Either way, if you don't want to mark the breakaway, it's a breakaway gap, it's okay, because my stop loss is just below this variable gap. So over here, that was your order block. You can see this is the order block. Let me actually mark that order block. My entry was from that order block actually, because I wasn't here when market came here. I was actually uploading this entry to my Twitter. So I pushed my button from that order block, and as you can see, this order block hold the trade perfectly. Then this was the propulsion block around that area. This was the propulsion block. Market has traded this propulsion block one more time, and then boom, market has taken this buy side liquidity. So that was the London session from today. So it was not the liquidity making session, it was the liquidity taking session. And I always keep telling that 95% of the time London is going to make the liquidity, but 5% of the time London is going to take the liquidity. Today's session was liquidity taking session. How did I know that? Because when market was actually going higher or was falling, there was no swing low or swing high which was valid to make the liquidity. Instead, I had to wait for so long, or I have to look for the 15-minute chart what it is actually doing. So I went for the liquidity taking session instead of liquidity making session today. By the way, after when market has taken that buy side liquidity, yeah, I tried to take one setup over there where there was the liquidity making session depending on that, but the problem was I didn't have the high time frame PTRA. From 15-minute chart, I have nothing over there. I have seen this inversion parabolic up over there. At the same time, I was uploading this entry, the next entry, to my Twitter, so I actually missed it around that time. So my plan was to push the button from there. My stop loss was going to cover the mid threshold, and look at this relatively equal loss around that area. Okay, so all of this relatively equal loss. I mean, yeah, it's not the clear relatively equal loss, but I prefer 15 to 20 handle from London session. Now, if you see, it actually went until the 16 handle. So if I could push my button over there, that 16 handle, at least I would take the partial around 15 handle, as I don't have any kind of last fair value gap, no relatively equal loss, just nothing. I would love to take a partial around 15 handle, and then I'll hold my trade maybe until this fair value gap. I would hold my trade. But I was uploading the video, so I was little late, and my entry was around that area. I guess from here, my entry was around that area. Okay. So later when I saw market reached until this area and it is reacting that single candle, down close candle, I just put my stop loss to the break even. So if I get stopped out to the break even, I'll be stopped out to the break even. That was my intention. And then all of this price action, as you can see, it is sideways, so there is nothing. Yeah, still I will keep actually observing some setup. I'm trying to make more models so that you guys can easily can take that and you can use that for your success. So I'm just doing a lot of observation or a lot of practicing just to make more easier model. So guys, that was the thing over here. I wanted to talk about this event horizon. That was really so awesome. Here, this was the event horizon. So if you can use this event horizon things in your mind, in time you will build more confidence about the price run, how far it can reach. Okay, you will start to build more confidence how to use this type of event horizon. Then if you can understand the accumulation things from the near the constant crossment, then how it is going to take the liquidity, it's gonna help you, I believe so. If you like this video, don't forget to subscribe to my channel and don't forget to give me the thumbs up. So until the next video, cheers guys.